Good morning, trading world. It is July 20th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY from a supposed vacation. There's a couple things that I want to go over this morning. I felt important enough to kind of bring me back and make a recording even while on vacation. Everyone in the market can see that Netflix was going to be a big deal. But let me explore some reasoning behind the bounce of Netflix and the market and why this pullback could lead to another continued up movement or pressure for a bit. First, there are three reasons behind the bounce in Netflix and the rest of the market. And one is very key but hardly ever talked about. The first reason is that the market and Netflix have been deeply oversold, giving us a great setup for a trend day up. Remember, the most explosive trend days happen when there are a lot of trades around a particular point. And when the move goes and a lot of traders are on the wrong side and suddenly move to close positions, and the fear of missing out is jump on, we get that explosive movement. In a pre-market, one of the last pre-markets I did before I left, we talked about or used the analogy of a crowded boat. Like the range that we've been in, we've just been adding more people to this boat. And crowded boat, and then all of a sudden people rush from one side of the boat to the other. And when you do that, especially when it's crowded and a lot of people rush to one side, it could capsize a boat. It could turn the boat over. The same is happening within trade. A lot of people are on one side of the trade, or a lot of people are on, the trade is crowded. The range that we're in has been very crowded. So when everybody runs to that one side, it has that same effect of the boat, capsizing the boat. But instead of turning the boat over, it could turn your account over if you're on the wrong side of it. So that's the first reason. The second reason is that still that large crowd, obscene amounts of order flow in this trading range mixed with earnings, numbers, and news. So right now, even on one of the last pre-markets, again, I talked about the market being data starved. So as they try to handicap what the Fed will do, they try to use every little piece of news or data to try to handicap what the Fed will do. And that causes us to have this really jumpy market where we're grinding one way and then bam, we drop, or we're grinding one way and bam, we shoot up. A really jumpy market. Now, the third reason is what I really want to focus on this morning. I've talked about this before, but I felt this was a great time to bring it back up. The third reason is the dollar and its buying power. If you've been following me the last week or so, I mentioned trying to find a short in the dollar. I was looking, like there was, I think it was Wednesday, maybe 4 or 5 days ago, or maybe coming into that Monday, I was really looking and hunting for a short in the dollar, but I think that Monday I may have said it doesn't look like it's here yet. And then I revisited on, I think, either Tuesday or Wednesday, but I was trying to get ready for vacation, and I ended up missing it completely. But I knew that it was coming. Now, I've been looking for a real bear market rally, and I knew that the news, numbers, and sentiment would not be enough to give us a reason to rally. Team this with the rise in the dollar and how it has skyrocketed along with inflation. Something would have to give. It didn't make sense to me to have the dollar gaining strength and inflation rising even faster. One would have to lose steam soon. So that's kind of the reasoning of me looking for that short in the dollar. Now, this is where we kind of get into the reasoning of why we got this bounce and what could kind of fuel us to kind of stay up here for a bit. If you watch gold futures, do you really think the value of gold changes? Answer that question to yourself. Gold is gold and has been for centuries. The only thing that changes is how much gold your dollar can buy. If that makes sense, gold pretty much stays the same, and the only thing that moves is the value of the dollar against the gold. So as the dollar goes up, the amount of gold or equity you can purchase goes down. And with the fall in the dollar, the amount of gold or equity you can purchase goes up. Now, the dollar usually has a leverage ratio of 3 to 5%. If we factor in the leverage ratio, we can get a rough estimate of where we should end up based on the dollar's new purchasing power. Now, I have a chart of the dollar, and if we go back to the height of the dollar at 109, 109.24, and go back, let's bring it down so we can see the chart. Over the last 4 days, the dollar has fell about 2.64%. So now if we take that 2.64% and multiply that by the leverage ratio of 3, we get 7.92%. So now, if we correlate that with the SPY, a gain of 7.92% over that same time frame, and here's our low here on the dollar, 371.04. And if we go up 7.92%, actually, let me do this. Let me unpeg this chart so that we can see let's try this again. The low is 371.04. Let's see if we can get 371.04. Very close. And we're going to go up 7.92%. 7.92% puts us around the 400 area on the SPY. So that's our goal to shoot for right now based on the dollar's new purchasing power. So even with the pullback that we're going to experience today, based on this calculation, we can hang around these levels for a bit, trying to get to that 400 on the SPY. So if we pull back today, don't count on this being the only try to get to that 400 area. So that's what I wanted to really cover, which most people don't think about, because everything that we do is quoted in US dollars, and we don't bring it up much, but the dollar has an impact on every trade because of the purchasing power. And we usually don't get this big of a rise and fall out of the dollar to where it could really impact things that often. But this was worth mentioning. This fall in the dollar that I had been looking for was definitely worth mentioning. I knew this would be one of the fueling reasons to get us going on this big bear market rally. That, along with short covering the data news, all of these things kind of have a part. But the dollar's new purchasing power was the biggest unseen thing at the moment that no one is really talking about. So I wanted to bring that to light. All right. Since I'm here, I might as well do the key levels to watch for today. Give me a moment and I will bring that up. All right, here we are back with the key levels to watch for today. Starting on the resistance side, we have our jack resistance at 393 to the 394 area. Our queen resistance is 395 to the 396 area. And then we have our king resistance 397 to 402. You're going to want to keep these resistance levels in mind throughout the week, because even with this pullback today, I seriously think we're going to give another go at this 395, 396 area if we don't come back at it today. I feel like we're going to have another try at it later on in the week. Then on the support side, we have our jack support 391 to 390. Our queen support 389 to the 388 area. And then our king support 387 to the 384 area. A lot of people always ask me, what does the jack, queen, king support resistance level mean? What does the jack? It's simple. It's me being a card player. It's just an easy way for me to rank resistance level. Instead of being boring and saying R1, R2, or S1, S2, I like to put jack, queen, king as a way to rank the different support levels or resistance levels. Now, the main thesis for today is bearish, meaning closing below the 392.27 with a projected target low of between 390 and 385, or we should say this 384 area. And this is going to be key today for me, looking to see if we can hold a higher low, giving us a kind of springboard to jump back up, to get back up to test this 395, 396 area. And this 395, let's say all the way to 397 is going to hold a lot of resistance. Now, our alternate thesis is bullish, closing above the 392.27 with a projected target high between 394 and 402. The reason why this 396, 397 level is going to hold a lot of resistance is that the current main channel we're in is between 379 and goes up to 397. So it's going to take a lot to break through that 397 area. And this back and forth through this range is building the energy one way or another, either to break up through this 397 or break out the lower side of the channel, which is 379. Again, I want to say one of the key things I'll be looking at today and the rest of the week is, in this pullback, can we maintain higher lows, which would tell me at some point soon we will make it to that 400 area if we can continue to hold higher lows. All right, with that, that brings us to the portion of our scenarios of the day. Give me a moment to bring that up. All right, here we are back with the first scenario, and this is where we try to visually prepare ourselves for the trading day based on the different day structures that we have. And there are certain things that happen during the first parts of the day that can kind of clue us in to what type of day structure we're having, and that day structure can kind of clue us off or key us off on whether we hang in a certain range or chop back and forth, or whether we're going to have an expansion day or breakout. Our first day structure for today's scenario, or most probable structure for the day, is going to be our expansive range day structure. We could look to set a decision area high boundary around the jack or queen resistance area before chopping back down for a portion of the day. Now, we could chop, it could bring us back down toward the queen support area and quite possibly the king support area at some point. But our ideal of trade in the day is to get moves on doing what we call the golden window, that maybe 9:30 to 10 time frame to 11 or 12 for intraday traders, and if it's a position deemed good enough for a swing, or you see it on a higher time frame, this could be an entry for a lot longer. But I am primarily a intraday trader, so I'm focused on positions intraday. So we have our expansive range day structure. One of the key things in our range day structure, whether it's an expansive range or just a regular range day structure, is that we cross the previous close, which is represented by the blue line here. This is where we closed yesterday. We're going to cross and close above or below that area at least once or twice, and we should break above it and close above it, and then we could come back below it. I don't count things where we just right on it, but we should have a clear close above or below to signify a range day type structure. So this is our expansive range day structure, and it looks like the probabilities for this and the rounded reversal, or our next scenario, are going to be pretty much the same. All right. Now that we have that, I will bring up the next scenario. All right. Our next scenario is our rounded reversal day type structure. I like to call it a range day because it has traits of both the range day and the trend day. Our rounded reversal day type structure, we could get a continued push lower toward the jack or queen support area and find midday chop around either our queen or king support area before spending the same energy we use coming down to go back up the second half of the day. So that's our rounded reversal day type structure. And one of the things that you can use to identify the rounded reversal day type structure is that there should be divergence almost from the opening, from the cash opening. And what I mean by divergence is that whatever indicator you use, or if you use internals, if price action is headed down like we have here, you should see almost an immediate divergence in your indicator where you start to get this slow inversion where your indicator is not following price action. It may be very light, the slope may be very slight, but it should be there usually within the first 2 or 3 bars. If you're on a 5-minute chart, the first 2 or 3 bars you should start to notice, or after, I should say, after the first 2 or 3 bars, you should start to notice this divergence. Convergence is where price action and your indicator are in harmony. Divergence is where price action and your indicator are not in harmony. So you should start to see this pretty much the entire morning, no matter what price action is doing as it continues to come down, you start to notice that your indicator is not going with price action. And that's one of the keys to identifying our rounded reversal day type structure early. So also with our rounded reversal day type structure, there's also a vice versa alert that I like to give. It is quite possible at times that we get the vice versa on the rounded day type structure. And our vice versa would be where you would see something like this, where we get our continued push higher instead of lower today. Get a continued push higher, and then we get our midday chop around either the queen or king resistance area before the second half of the day kind of taking that same energy we use going up to come back down the second half of the day. So that's going to be the vice versa warning on the rounded reversal day type structure. All right, our last scenario is our trend day down day type structure. In this, we can open gap down. Remember, the blue line represents the previous close, and the gap is us opening away from that previous close. If we open a kind of irrational amount off of that previous close, depending on the equity you're looking at, that inordinate amount can be different things, but I want to try to qualify it as 10%, you know, a 10% change or above from that previous close. But if we get a gap down, probably the first and best way to recognize a trend day down is that we're going to want to try and start off by filling the gap between where we open and the previous close. And the biggest key to look for on the trend day, especially the trend day down, is that previous close on the trend day down is going to act as resistance. We could come test it, but it is going to hold as resistance, and we're going to find that resistance somewhere on or before the previous close. We should not get a close above the previous close from the prior day. And from there, that's where we should get our reversal and begin the downtrend for the morning. And this is our golden window of trade here. It's usually the biggest trend of the day, happens usually around this 10 o'clock, 9:45, 10 o'clock to usually 12, after 12 of the lunchtime hour. And we usually find our midday chop around either our queen or king support area. And usually on a trend day, we'll open up the second half of the day with sometimes what seems to be a head fake in continuing the main trend that we had for the morning. And the interesting part of trend days is that most of the time we get some type of rally into the close. Sometimes it's very small, very minute. And what's usually the interesting thing to see is how big of a rally, because if we get a big rally into the close, that's usually something that we watch for to carry on to the next part of the day, to the next trading day. So those are the three scenarios that we're preparing for. Usually the probabilities are different for each one, but today probabilities are kind of similar for each one based on a lot of different factors. But this gives us something to visualize, something to identify, so that when we see it live, we know what to do. We know where to place our trades. So this is what I do usually on a morning basis before market. I'm on vacation right now, so pre-market is, the pre-market analysis hasn't been available every day this week, and I will be on vacation until the 31st. But like you, I am a trader, so even on vacation, I have to follow up on positions that I have. And if there's enough time and I can get up early enough, I will try to put something out there these days, even on vacation. So I hope this helps. And one of the things that is very important to me and should be very important to you is that you know and understand your risk on each position you take. Because your most important job as a trader is to protect the capital that you already have, and we do that by understanding our risk in each position. So again, I hope this helps, and I'm going to close this out by wishing you a positive trading day. Have a great one.